Hey everyone, and welcome back. Today, we're going to be doing a deep dive into Wolfspeed's stock. You guys sent in a Motley Fool article, and it paints a pretty interesting picture of the company.
Yeah, it's pretty crazy.
This company was trading above like $140 a share back in 2021, and now it's just kind of like hanging out around $5.
Oh, wow.
So we're going to try to figure out what is going on and whether this stock is worth your attention at all.
All right, sounds good. So Wolfspeed is all about silicon carbide chips, which are designed to outperform traditional silicon chips
Okay.
in a bunch of different ways. We're talking higher voltage, temperature, and frequency tolerance, making them ideal for, power-hungry applications.
Okay, that makes sense. I remember reading about how SiC was supposed to be like this huge thing
Right.
for EVs, 5G, all sorts of next-gen tech. So what happened? Did Wolfspeed just like completely stumble? Or did the whole SiC market just kind of like fiddle out?
Well, it's a little more nuanced than that.
Okay.
I mean, Wolfspeed stock did have a massive run-up. It gained almost 470% in the 5 years leading up to late 2021, but then things took a turn.
Yeah, a 90% drop is, that's more than just a turn.
Yep.
What factors contributed to like such a drastic decline?
Well, the Motley Fool article kind of points to several key factors. First, revenue growth was a crazy 42% in fiscal 2022.
Wow.
And it's projected to actually decline by about 6% by fiscal 2025.
Oh, wow.
That's a big swing.
That is a huge swing. Yeah, from like boom to bust pretty quickly. Was that all because of the EV market cooling down?
I mean, the EV slowdown definitely played a role, especially with Tesla, one of Wolfspeed's major customers,
Right.
announcing they'll be using 75% fewer SiC chips in their future powertrains.
Hold on, 75% fewer?
Yeah.
What's the story there? Is Tesla moving away from SiC altogether, or is something else going on?
That's a great question. It gets to the heart of, how we analyze these situations. It's easy to just kind of jump to conclusions,
Right,
but we need to dig deeper. Is this like a Tesla-specific strategy shift
right.
because of their own, tech advancements? Or is this a sign of a broader trend
Yeah,
in the EV industry? We'll need to explore that further.
absolutely. So we've got slowing growth, a major customer potentially pulling back.
Mhm.
What else is contributing to Wolfspeed's struggles?
Well, increased competition is another big factor.
Okay.
Infineon and On Semiconductor, both pretty established players
Right.
in the semiconductor market, have entered the single arena.
Okay.
They bring a lot of manufacturing muscle and resources to the table.
So it's not just about whether or not SiS technology is the future, right?
Mhm.
It's about like who can deliver it most effectively.
Exactly.
And what about Wolfspeed's financials?
Yeah.
Can they handle this pressure?
Well, that's where things get really interesting.
Okay.
Their adjusted gross margin, which basically tells you how much profit they're making,
Right.
on each chip, after subtracting direct production costs, has taken a nosedive.
Oh, no.
It's projected to drop from a healthy 36% to a measly 2%.
Ouch, that doesn't sound very sustainable.
Yeah.
And I'm guessing they're not sitting on like a pile of cash to weather this storm.
Not exactly. They're currently unprofitable and carrying over $6 billion in liabilities.
So they're losing money, facing intense competition, and drowning in debt.
Yeah.
What are they doing to turn things around?
Well, Wolfspeed's taken some aggressive steps.
Okay.
They're expanding their plants in New York and North Carolina,
Uh-huh.
aiming to increase production capacity and, drive down manufacturing costs. They've also received a $750 million grant from the CHIPS and Science Act,
Oh, wow.
which is a big vote of confidence from the U.S. government.
Yeah, that's huge. It sounds like they're going all in on becoming like the dominant player
Right.
in the SiC market. But these are expensive moves, especially when you're already struggling financially. How risky is this strategy? And what about the recent CEO change?
Yeah.
Does that add another layer of uncertainty to the mix?
Those are crucial questions. And, that's exactly where we need to dive deeper in the next part of our analysis.
Okay.
We'll look at Wolfspeed's response to these challenges, assess their potential for a turnaround, and analyze the level of risk involved for investors.
All right, so sounds like we have a lot to unpack. So listeners, stay tuned for part 2 of this deep dive into Wolfspeed. We'll tackle these complex questions and see if we can decipher whether this company is a phoenix rising from the ashes or headed for a fiery crash. Okay, so we left off talking about Tesla's decision to cut back on silicon carbide chips by a whopping 75%. What are your thoughts on that move? Is this a sign that the SiC hype is fading, or is there more to the story?
Well, I think it's important to unpack Tesla's motivations here.
Okay.
It could be that they found ways to optimize their EV designs, requiring fewer SiC chips to achieve the same performance. Or maybe they're exploring alternative materials or technologies altogether.
So instead of signaling a decline in SiCing importance, this could actually point to Tesla pushing the boundaries of innovation.
Exactly.
Potentially even beyond sex.
Yeah, and this brings up a crucial point when analyzing any emergent technology.
Okay.
We need to consider not just its current applications, but also its future potential and the possibility of it being surpassed by even newer innovations.
That's a great point. So Tesla's move might not be the death knell for SEC, but rather like a natural evolution in the ever-changing landscape of technology.
Right.
But even if SECs remain relevant, Wolfspeed still has to contend with some pretty fierce competition. How do they stack up against rivals like Infineon and ON Semiconductor?
Well, Wolfspeed's early mover advantage in sex is undeniable. They've been in this space for a while and have established valuable partnerships
Mm-hmm.
and a reputation for quality. However, Infineon and ON Semiconductor are no slouches.
Right.
They have deep pockets, extensive manufacturing expertise, and a proven track record of success in the broader semiconductor market.
So it's kind of like a David versus Goliath situation.
In some ways, yeah.
But we can't forget about Wolfspeed's financial challenges, right?
Right.
Their debt load is substantial, and they're currently operating in the red. How do you see this impacting their ability to compete and innovate?
I mean, their debt level is definitely a concern.
Yeah.
It limits their flexibility and increases their vulnerability to economic downturns.
Right.
And can make investors nervous. But let's not overlook the $750 million grant they received from the CHIPS Act.
Right.
I mean, that's a significant injection of capital.
Yeah.
And a clear sign that the U.S. government sees Wolfspeed as like a strategic asset.
So it's kind of a mixed bag financially. They're carrying a lot of debt, but they also have this government back-end, which could be a game changer.
Mm-hmm.
It's a high-stakes gamble, for sure. Now, Wolfspeed is also dealing with a new CEO at the helm. Does that add another layer of complexity to this situation?
Absolutely.
Okay.
New leadership always brings a shift in strategy and priorities.
Yeah.
The new CEO will likely have their own vision for Wolfspeed's future,
Right.
which could mean changes to their expansion plans, R&D investments, and even their core focus.
So even with all this potential, there's a lot that could go wrong. What do you see as the biggest risks facing Wolfspeed right now, the things that could really derail their plans?
I think over-reliance on government support is a risk. While the CHIPS Act funding is a boon, it creates dependence
Right.
on political decisions and budgetary allocations that are, beyond Wolfspeed's control.
Right. Political winds can change quickly.
Exactly.
And that's not something a company can necessarily plan for. What other risks are on your radar?
Execution risk is another big one. Expanding production facilities is a complex and expensive undertaking.
Uh-huh.
Delays, cost overruns, or technical challenges could significantly impact their profitability and ability to compete.
And on top of that, they need to stay ahead of the innovation curve, right? What if their competitors develop superior SiC technology?
Right.
Or discover new materials that outperform SiC altogether?
That's always a possibility in the fast-paced world of technology.
Yeah.
Standing still is not an option.
Right.
Wolfspeed needs to constantly invest in R&D
Mm-hmm.
and be prepared to adapt to evolving market demands
Right.
and technological breakthroughs.
It sounds like there are a lot of moving parts
Yeah?
and a lot of potential pitfalls. What are the possible scenarios for Wolfspeed's future, and what factors are most likely to determine their success or failure?
Well, one scenario is that Wolfspeed successfully navigates these challenges.
Okay.
They ramp up production at their new facilities, maintain a technological edge, and leverage their government support to become the dominant sixth player. In this scenario, their revenue rebounds, they become profitable, and their stock price soars.
That's the dream scenario for investors that are betting on Wolfspeed's comeback. What does the less optimistic scenario look like?
The flip side is that they stumble with their expansion plans, struggle to control costs, or lose market share to their rivals.
Okay.
In this case, they could face mountain losses, a further decline in their stock price, and potentially even become an acquisition target.
So it's a high-stakes game with a wide range of possible outcomes. Let's look at the projections from the Motley Fool article.
Okay.
They're predicting a remarkable recovery in Wolfspeed's revenue with a 44% compound annual growth rate from fiscal 2025 to 2027.
Those projections are certainly optimistic.
Yeah.
And it's important to remember that they're based on a lot of assumptions that may or may not pan out.
Right.
The seat market itself is still expected to grow at a decent pace.
Yeah.
But that doesn't guarantee success for Wolfspeed specifically.
Right. Market growth is one thing, but capturing a significant chunk of that market is a whole different ballgame.
Exactly.
And then there are the unpredictable external factors that could throw a wrench in the works, like geopolitical tensions, global economic slowdowns, or even black swan events that nobody sees coming.
Exactly. We have to acknowledge the inherent uncertainty when dealing with emergent technologies and rapidly evolving markets. There are no crystal balls and no guarantees.
So after all this analysis, let's bring it back to our listeners' core question. Is Wolfspeed stock a buy right now?
That's the million-dollar question, isn't it? And there's no easy answer.
Yeah.
On the one hand, you have a company with pioneering technology,
Right.
in a growing market, strong government support, and ambitious plans for expansion.
Right.
On the other hand, they're facing intense competition, carrying a heavy debt load, and operating under new leadership with an unproven strategy.
So a lot of potential, but a lot of risk as well.
Exactly.
It's a classic high-risk, high-reward scenario, right?
Precisely. Investing in Wolfspeed at this stage is a bet on their ability to overcome these challenges and emerge as a leader in the sixth revolution.
And that decision ultimately comes down to individual risk tolerance and investment goals.
Exactly. Someone with a higher risk appetite and a long-term investment horizon might be willing to take a gamble on Wolfspeed's potential.
Right.
But for someone seeking more stability and short-term gains, it might be too risky a proposition.
It's a tough call for sure. We've covered a lot of ground today, from Wolfspeed's early successes to their current struggles and the uncertainties that lie ahead.
We've examined the technical landscape, the competitive dynamics, the financial hurdles, and the geopolitical factors at play.
But there's one more layer to this story that we haven't fully explored yet, the broader implications of Wolfspeed's success or failure. It goes beyond just this one company and touches on some really interesting questions about U.S. competitiveness in the global technology landscape.
That's a great point, and that's exactly where we'll pick up in the final part of our deep dive.
So listeners, stick with us as we delve into the geopolitical significance of Wolfspeed's journey and explore the wider ramifications of the silicon carbide revolution. All right, we're back for the final part of our Wolfspeed deep dive. We've talked about the company's, roller coaster ride, the potential of 6C technology, and the fierce competition they're facing. Now, let's kind of zoom out and look at the bigger picture. You mentioned earlier that Wolfspeed's story is intertwined with some, larger geopolitical trends. What did you mean by that?
Well, what's fascinating here is that Wolfspeed kind of finds itself at the intersection of technology, economics, and even national security.
Okay.
Remember the $750 million grant they received from the Chips and Science Act?
Right.
That's not just about boosting one company.
Uh-huh.
It's about the U.S. government's strategic push to, strengthen domestic semiconductor manufacturing.
Okay, so it's bigger than just Wolfspeed. We've been hearing a lot about the U.S. trying to reduce its reliance on foreign chip makers, especially with all the, rising tensions between the U.S. and China.
Exactly. Semiconductors are the building blocks of modern technology.
Yeah.
From smartphones and laptops to advanced weapon systems.
Right.
And the U.S. government is increasingly concerned about relying too heavily on foreign suppliers, particularly in a sector with potential national security implications.
So Wolfspeed, as the largest 6-chip maker in North America, suddenly becomes a key player in this strategic game. Their success or failure could have ripple effects far beyond Wall Street.
Precisely. If Wolfspeed thrives, it could help bolster the U.S.'s position in the global semiconductor market, reduce reliance on, potentially adversarial nations, and even spur innovation across a range of industries.
But on the flip side, if they falter, it could set back those efforts and make the U.S. more vulnerable in the long run.
Exactly. That's the high-stakes reality of this situation. It's not just about whether you or I decide to buy a few shares of Wolfspeed stock. It's about the broader implications for technological leadership, economic competitiveness, and even national security.
Wow, that's pretty heavy stuff to think about.
Yeah.
It really highlights how interconnected everything is these days. Okay, so let's say our listener is taking on this in and thinking, this 6 technology sounds like it could be a game changer, and if Wolfspeed is at the forefront of that, maybe it's worth the risk. What would you say are the biggest red flags they should be watching out for? The things that could really derail Wolfspeed's plans?
Well, we've touched on a few key risks already, but let's dive a little deeper.
Okay.
One is the potential for over-reliance on government support.
Okay.
While the CHIPS Act funding is a major boost, it also creates a dependence on political decisions and funding allocations that are beyond Wolfspeed's control.
Right. A new administration could come in with different priorities, or Congress could decide to cut funding for semiconductor initiatives. That's a risk that any company relying on government support has to contend with.
Another major risk is execution. Scaling up production to meet the growing demand for SIT chips is a complex and expensive endeavor. If Wolfspeed encounters, significant delays, cost overruns, or technical challenges during this expansion phase, it could severely impact their profitability and ability to compete.
And we can't forget about the competition. Infineon and One Semiconductor are formidable rivals with deep pockets and a history of innovation.
Exactly. Wolfspeed can't afford to rest on its laurels. They need to constantly push the boundaries of SiC technology, develop new applications, and find ways to stay ahead of the competition. If they fall behind in the innovation race, it could be very difficult to catch up.
So there are definitely some potential pitfalls on Wolfspeed's path to success. It sounds like this is not an investment for the faint of heart.
It's certainly a high-risk, high-reward proposition. But for investors who are willing to embrace that risk and believe in the long-term potential of SiC technology, Wolfspeed could be a fascinating company to watch and potentially a very rewarding investment.
I think we've given our listener a lot to think about today. We've gone from the nuts and bolts of SiC chips to the complexities of global semiconductor markets and even the geopolitical forces shaping the technology landscape. It's been quite a journey.
It's a testament to the power of these deep dives. We start with a seemingly simple question, is this stock a good buy? And end up exploring a whole web of interconnected ideas and possibilities.
And that's what makes it so engaging. We've learned about Wolfspeed's past, their present challenges, and the uncertain but potentially revolutionary future they're trying to create.
We've seen how a single company's story can reflect larger trends in technology, economics, and even global politics.
Exactly. So as you continue to explore the world of invest in and emerging technologies, remember to always look beyond the headlines and delve deeper into the forces driving innovation and shaping our world.
And who knows, maybe someday we'll be doing a deep dive into a company that you discovered and brought to our attention.
That's what we love to see. Keep those curious minds working. And thanks for joining us on this deep dive into the world of Wolfspeed and the silicon carbide revolution. Until next time, keep exploring.